Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. In today's podcast, I wanted to talk about an article that I ran across as I was doing some research. And the article asked it's from a while ago, almost a year ago, about why is E&Y at the heart of so many companies that have recently imploded. And specifically, it was talking about Wirecard and a couple other companies, Luckin Coffee, and I think it was just like a string of companies that E&Y had audited. But we pay attention to the big four accounting firms here. We know that E&Y isn't at the center of all these companies. It's all the big four accounting firms, just because of the nature of what they do and how many companies they audit. But I thought it was interesting. It used some information from Audit Analytics, which we talked about here before, which Audit Analytics goes through what it sounds like the analytics of audits by all accounting firms, not just the big four, but it typically shows audits won like during the quarter, and like basically what it shows is just all these audits being shuffled between the big four and then a few mid-sized firms. But it was very interesting, their analysis of E&Y. It's basically what we say on this podcast, so it just kind of confirms that the E&Y charges less fees. And I think what they're trying to show in this article is that E&Y charges less fees and they go after younger companies. And we've spoken about that on here because we speak about how E&Y focuses on tech companies. But if you look at the audit fees on those tech companies, they're nowhere near what PwC gets from large financial service companies. And I mean, there's definitely a danger here because they're younger companies, but also I think E&Y underbids. It's not just on audits, because in my experience, E&Y underbids on everything, and they underbid by a lot just to win. And they say that they will. What E&Y is hoping to do is they hope to attract these companies before they go public, and then they'll make up for the initial discount in audit fees. And I disagree with that. I think E&Y just, discounts their audit fees, discounts all of their fees no matter what. And I mean, it's a practice of the big four accounting firms to to say that once they win something, they're going to increase the audit fees, or they're going to win other work, or they're going to make it up in the future. And that doesn't really happen. And that's why the big four end up relying on outsourcing or trying to use technology. And, it's what I've always said on this podcast, is that the big four need to focus on adding value to their clients and not shaving off cheap expenses. And what ends up happening, as this article points out, is that E&Y misses a bunch of companies that were doing bad things, and it really damages their brand. And specifically, the article talked about Wirecard, which has been all over the news for a while. And this is another reason why I wanted to focus on this article, because it says the audit of Wirecard, they failed to notice some issues with cash, and that the company was being charged with falsifying bank balances, and that the client gave false bank confirmations. And I think that just goes to my point that it's always involving cash, and the big four accounting firms can solve a lot of their problems if they just become better at looking at cash. I mean, you can scope the audit 10 ways from Sunday, but if you don't get cash right, you're going to miss everything. But also, the article says that E&Y was going to change their activity by, improving or enhancing their skepticism or adding skepticism to their audits. And I mean, the big four have been doing that for years, so I don't think that will change anything. The big four just have to get better at auditing cash, and if they have to put their heads together with regulators, and that's what they have to do. But this article goes on to talk about EY's work at WeWork, where they were planning, where WeWork was planning to go public, and that didn't go well. And the Luck and Coffee, where they're falsifying some sales on there. But it's a very interesting article, and it shows how E&Y has won a lot of clients that IPO'd, which is initial public offering, and went public. But I mean, even though E&Y wins all these clients a lot of the time, a lot of audit clients, they're very low fee. And another thing that points to me is like there's low fees. They win a bunch of audits, and E&Y has a lot of employees. And what that shows to me is that E&Y is paying their employees less than the other big four accounting firms because the amount of revenue they have versus the vast number of employees they have is not enough to have similar compensation as the other big four accounting firms. So that's just, there's a lot of things to be learned from this. It's E&Y, the way they conduct their business. If you're an audit, but not only if you're an audit, it's just they underbid everything. And that's just how they approach their business, by just vastly underbidding. And a lot of times too, when you're doing an RFP at a client, you're not able to see the other big four accounting firms and what their fee is. And so like E&Y will just blow away everybody else, coming way under what, any of the other big four accounting firms would scope. And, I mean, that's also a big deal for risk, because if you do end up getting sued, then, that can really impact your bottom line. And it can also impact how much people make with bonuses, because you're not going to get a good bonus if you have a huge lawsuit in that year. So it's just a very interesting article and a lot to learn about not only E&Y, but the big four accounting firms. And it might seem to some people that there's one big four accounting firm at the heart of a lot of the problems of companies going under, but that's not the case. We see E&Y and KPMG, along with PwC and Deloitte, at the heart of a lot of companies. They're all being sued across various countries and companies right now for various things. So you can't say that E&Y is the only one at the heart of it. But this article proved or showed some reasons why E&Y might be at a lot of struggling companies, and it's just the way that they run their business and bid on contracts. So that's the podcast for today. Make sure to subscribe to this podcast to get future updates, and support us financially if you can through the Buy Me a Coffee link in the show notes. And if you can't do that, make sure to subscribe to our YouTube channel, Big Four Accounting Firms. And thanks for listening.